Respected viewers, thank you for giving me a few quiet minutes of your life. I don't take that lightly. Time is the one asset none of us can compound once it's gone. So I welcome you with humility and with hope that something said here today might gently tilt the direction of your future. Somewhere right now, a quiet decision is waiting to be made. A decision so small it feels harmless, yet so powerful it can quietly decide whether your later years are lived in dignity or in regret. Destiny doesn't usually arrive with thunder. It whispers. Wealth is often built the same way, not through dramatic strokes of genius, but through ordinary choices repeated faithfully over time while the rest of the world is distracted. Most people believe success in investing is about brilliance, about secret knowledge, about being faster, smarter, luckier than the crowd. That belief has quietly ruined more financial lives than any market crash ever could. And I want to talk to you today about a far simpler path, a path so boring, so unglamorous that most people walk right past it. Yet it has carried millions to financial freedom, peace of mind, and a kind of quiet confidence money alone cannot buy. I've met people who worked themselves to exhaustion chasing the next hot stock, the next business idea, the next shortcut to wealth. Some were intelligent beyond measure. Many were hardworking to the point of self-destruction. And yet decades later, they were still running, still anxious, still unsure if they'd ever truly arrive. Meanwhile, a different group, often less flashy, less vocal, less stressed, simply stayed the course. They invested patiently, consistently, and with humility in the productive engine of human progress itself. You see, most people misunderstand money. They think it's about excitement, about winning, about proving something to someone. But money at its best is a tool for freedom. Freedom from fear, freedom from dependence, freedom to live life on your own terms without constantly negotiating with tomorrow. And the tragedy is not that people fail. The tragedy is that they fail while ignoring the simplest, most reliable approach available to them. The broad American economy is not a slot machine. It is a living, breathing organism fueled by innovation, discipline, competition, and human ambition. When you invest in a broad index that represents this system, you are not betting on one hero, one CEO, or one lucky break. You are quietly partnering with thousands of businesses that wake up every day trying to solve problems, serve customers, and earn a profit. Over time, that effort compounds. I've watched markets fall. I've watched them rise. I've watched fear turn intelligent adults into emotional gamblers, selling at the bottom and buying at the top because they couldn't sit still. The greatest enemy of a good investment is not volatility. It is impatience. And the greatest advantage most people have is not intelligence. It is time. Time when respected becomes a miracle worker. There was a period in my life when money felt tight, not because I lacked opportunity, but because I lacked perspective. Every dollar felt heavy. Every decision felt urgent. That urgency is dangerous. It pushes people to overtrade, overthink, and overreact. The market doesn't reward activity. It rewards endurance. The S&P 500, in its quiet, unassuming way, rewards those who understand that progress is uneven but persistent. Most people don't need complexity. They need discipline. They don't need prediction. They need participation. The human brain loves stories, dramatic wins, sudden fortunes. But wealth is usually built through monotony, month after month, year after year. Investing even when it feels uncomfortable, especially when it feels uncomfortable. When you invest broadly and stay invested, you allow yourself to step out of the emotional storm. You stop asking, what should I buy next? And start asking, who am I becoming through my habits? Because investing is not just a financial act. It's a character test. It tests your patience, your humility, your ability to delay gratification in a world that sells urgency like candy. And here's the quiet truth most people don't want to hear. You don't have to be extraordinary to build extraordinary outcomes. You simply have to avoid being foolish. Avoid excessive fees. Avoid constant tinkering. Avoid the illusion that excitement equals progress. A low-cost broad index quietly removes many of the ways you can hurt yourself. This approach won't make you interesting at dinner parties. It won't give you stories of daring bets or dramatic wins. But one day, years from now, it may give you something far more valuable. Calm. The calm of knowing your future isn't balanced on a fragile guess. The calm of knowing you aligned yourself with the long-term growth of human enterprise. So as we sit here together, I want you to ask yourself, are you trying to be impressive or are you trying to be free? Because those two goals often travel in opposite directions. Freedom, real freedom, has a texture to it. It feels quiet. It feels steady. It doesn't announce itself. And that's why so many people miss it while chasing noise. They mistake motion for progress and complexity for intelligence. Yet the world's most enduring fortunes were not built on cleverness alone. They were built on temperament. I've seen brilliant minds sabotage themselves because they couldn't endure boredom. They needed action. They needed to feel involved. The market, sensing this weakness, happily took their money. You see, the market is not cruel, but it is indifferent. It doesn't care how hard you work, how badly you want success, or how unfair life has been to you. It simply rewards those who align themselves with reality. Reality is this: businesses as a whole tend to grow over time, not in straight lines, not without pain, not without interruptions, but they grow. Human beings innovate, they adapt, they compete, they improve. When you invest in a broad index, you are not claiming to know which company will win next year. You are humbly admitting that you don't know, and that admission is strength, not weakness. Most people are taught that humility is a personal virtue, but a financial flaw. They are told confidence means prediction, boldness means concentration, and courage means taking big bets. That teaching is deeply flawed. In investing, humility allows you to survive long enough to win. Arrogance demands constant proof, and the market eventually provides a lesson, often at a very high price. I remember watching friends panic during downturns. Good people, smart people. They stared at red numbers as if those numbers were personal insults. They sold because they couldn't bear the discomfort of temporary loss. What they didn't realize was that volatility is not punishment. It is the admission price for long-term returns. Without it, there would be no reward worth having. The S&P 500 doesn't promise certainty. It promises participation. Participation in recessions, yes, but also in recoveries. Participation in mistakes, but also in breakthroughs. You don't get to pick and choose the chapters. You either own the story or you don't. And the story of productive enterprise over long stretches of time has been remarkably generous to those who stayed loyal. There is a peculiar peace that comes from accepting what you cannot know. When you stop forecasting, you start focusing. You focus on saving more, on living slightly below your means, on letting compounding do the heavy lifting while you get on with the business of living a meaningful life. That is an underrated advantage, the freedom of attention. Too many people are mentally exhausted by their investments. They check prices like vital signs as if their self-worth rises and falls with the market. That's not investing. That's emotional hostage-taking. A broad index quietly removes you from that drama. It says, go live, go build, go love. The system is working in the background. I've often thought that the greatest gift investing can give is not wealth, but patience. Patience spills into every other area of life. You become less reactive, less desperate, less tempted by shortcuts, and patience, once learned, compounds just like money does. Consider this: the greatest enemy of compounding is interruption, not downturns, not crashes, interruptions, selling, switching, second-guessing. Every time you jump ship, you reset the clock. The index investor understands this intuitively. They let the clock keep running. And yes, there will be years when it feels foolish, Years when neighbors boast about spectacular gains from concentrated bets. Years when headlines scream that everything has changed. Those moments are tests, not of intelligence, but of resolve. Most people fail these tests not because they are wrong, but because they are tired. This path asks very little of you intellectually, but a great deal emotionally. It asks you to trust that progress is happening even when you can't see it clearly. It asks you to accept average returns in exchange for extraordinary outcomes over time. And it asks you to believe that boring done consistently can outperform brilliant done sporadically. If you can internalize that, truly internalize it, you gain an edge that no algorithm can replicate. The edge of emotional stability, the edge of long-term thinking, the edge of alignment with reality. And reality over long periods has favored those who quietly own the productive capacity of society and then simply waited. Waiting is misunderstood. People think it me, and's doing nothing. In truth, waiting is one of the hardest forms of work there is. It requires faith without applause, discipline without immediate reward, the ability to sit through uncertainty without demanding reassurance. Most people cannot do that, and that is why the simple path remains so uncrowded. I've often said to myself that the world doesn't reward intelligence nearly as much as it rewards rational behavior. Rational behavior, over decades, looks almost irrational in the short term. It looks slow, it looks cautious, it looks boring. And that's exactly why it works, because it runs counter to our instincts. The instinct when markets fall is to flee. The instinct when markets rise is to chase. Both instincts are deeply human and deeply destructive to long-term results. A broad index doesn't eliminate these instincts, but it gives you a structure strong enough to resist them. It gives you a rule set that says, I will not pretend to be smarter than the collective effort of millions of businesses and workers. I once watched a small business owner pour everything he had into chasing the next opportunity. He was always one deal away from security, one risk away from freedom. Years went by. Stress piled up. His life became a series of narrow escapes. Contrast that with someone who quietly invested a portion of every paycheck into a broad index, reinvested dividends, and never stopped. No drama, no heroics, just consistency. Decades later, one story is filled with exhaustion, the other with quiet dignity. The market doesn't require your genius, it requires your participation. It doesn't ask for perfect timing, it asks for endurance. The S&P 500 is not about predicting the future. It is about accepting that the future will include both triumph and trouble, and choosing to own it anyway. When you own a broad slice of the economy, you align yourself with incentives that are older than any one generation. Businesses want to survive. They want to grow. They want to outdo competitors. Governments want productivity. People want better lives. These forces don't move in straight lines, but they do move forward over time. Betting against them requires extraordinary arrogance. Betting with them requires quiet humility. I've learned that peace of mind has a value most spreadsheets ignore. Knowing that you don't have to constantly outsmart the world is liberating. Knowing that your plan doesn't depend on a single outcome working perfectly allows you to sleep at night. That peace is not accidental. It is designed. Too many investors confuse activity with control. They think by doing more, they are safer. In reality, the opposite is often true. The more levers you pull, the more ways you give yourself to be wrong. Simplicity is not a lack of sophistication. It is sophistication distilled. There will be moments when the headlines make it sound like the system is broken forever. There always are. War, inflation, political chaos, technological disruption. Every generation believes its challenges are unprecedented. And yet, productive enterprise adapts. It always has. The index doesn't require you to know how, only that it will. This approach also forces an honest confrontation with yourself. Are you investing for freedom or for entertainment? Are you trying to build something lasting or something exciting because excitement is expensive. Freedom is patient. I've seen people with modest incomes build substantial wealth simply because they started early and refused to quit. And I've seen people with extraordinary incomes remain anxious and dependent because they never developed a system they could trust. Income helps. Behavior decides. When you invest this way, you are making a statement about who you are. You are saying, I be. Leave in progress, but I don't demand perfection. I accept volatility, but I don't panic. I value time more than drama. That statement, repeated month after month, year after year, becomes an identity. And identities, once formed, are powerful. They guide decisions even when emotions are loud. They keep you anchored when the world feels unstable. They allow compounding to work uninterrupted, which is where the real magic lives. Magic is a dangerous word in finance. It makes people think of tricks, secrets, and shortcuts. But the real magic is almost invisible. It's the kind that works slowly, quietly, and without asking for your attention. Compounding doesn't announce itself when it begins. In fact, for a long time, it can feel like nothing is happening at all. That's the part most people can't endure. The early years feel thankless. The numbers are small, the progress is subtle, and the temptation to abandon the path for something louder is constant. But those early years are laying a foundation. Not just financially, but psychologically, you are training yourself to trust process over impulse. I've often thought that the hardest dollar to earn is the first one that works for you. After that, the relationship changes. Money stops being only something you trade your time for. It becomes a partner. A silent one, yes, but a loyal one if treated with respect. Broad index investing is how many people first experience that shift. There's also an uncomfortable truth most don't like to admit. The average person is not wired to pick stocks well. Not because they lack intelligence, but because they lack emotional insulation. When you concentrate your bets, every piece of news feels personal. Every downturn feels like a verdict on your judgment. That pressure erodes decision-making over time. By spreading ownership across hundreds of leading companies, you remove the need to be right about any single one. You allow yourself to be wrong many times and still win. That is a profound advantage. Age. Life rarely gives you that kind of margin for error. I've watched cycles repeat themselves with remarkable consistency. New technology arrives, expectations soar, valuations stretch, reality intrudes, panic follows, then slowly, quietly, businesses adjust and move forward. The index absorbs all of this, the mania and the despair, and keeps going. It is not fragile, it is anti-fragile. The greatest irony is that people who fear market crashes the most often choose strategies that make crashes devastating. Concentration without temperament is fragile. Leverage without humility is lethal. Simplicity paired with patience is resilient. This path also teaches gratitude. When you own a slice of the economy, you begin to see prosperity differently. You notice the systems that create value. You appreciate the invisible cooperation of millions of people doing their jobs. Wealth stops feeling like a zero-sum game and starts feeling like shared progress. There's something deeply grounding about that perspective. It reduces envy. It reduces comparison. You stop measuring yourself against the loudest success stories and start measuring yourself against your own values. Are you saving consistently? Are you staying invested? Are you living within your means? These questions matter more than market forecasts ever will. I've seen people abandon sound plans because they wanted to feel special. They wanted a story to tell. They wanted to beat the market, not join it. What they didn't realize was that joining the market over time already puts you ahead of most participants, because most participants sabotage themselves. The index investor understands a subtle truth. You don't need to capture every upside to build a good life. You just need to avoid catastrophic mistakes. Avoiding stupidity is easier than achieving brilliance. And yet, it requires humility, a trait RC. Culture does not celebrate enough. As the years pass, something interesting happens. The noise fades. The plan becomes routine. And then one day, almost by surprise, you look back and realize the waiting was working the entire time. The numbers finally reflect the patience. The freedom begins to feel tangible. That moment is not explosive. It's quiet. It arrives without fanfare. And perhaps that's the most beautiful part. Quiet success has a way of humbling you. When wealth grows without drama, it doesn't inflate the ego, it steadies the soul. You begin to realize that much of what the world celebrates, speed, boldness, constant reinvention, is often a disguise for insecurity. The steady investor learns to move at the pace of reality, not the pace of headlines. One of the most important lessons money ever taught me is that you don't rise to the level of your ambition, you fall to the level of your systems. Ambition is emotional, systems are practical. The S&P 500 used properly is not a dream, it's a system that removes unnecessary decisions, a system that works even when motivation fades. Motivation is unreliable. It comes and goes with mood, news, and circumstance. Discipline, on the other hand, can be designed. Automatic investing, low costs, broad diversification, reinvestment. These are not exciting ideas, but they are durable ones. They function on your worst days, not just your best. I've met people who waited for confidence before they invested. Confidence never came. Life stayed busy. Expenses grew. Years slipped by. Then one day they realized time had quietly passed them by. Confidence is not a prerequisite for action. Action, repeated consistently, is what builds confidence. The beauty of a broad index is that it allows imperfect people to achieve excellent outcomes. You don't have to start at the perfect time. You don't have to invest the perfect amount. You don't have to understand everything. You simply have to start and not stop. There will be periods when contributing feels almost foolish. When markets are down and optimism is scarce, investing feels like walking into fog. But those moments are not setbacks, they are invitations. Invitations to buy future progress at a discount. The market transfers wealth not from the unlucky to the lucky, but from the impatient to the patient. Ivy often reflected on how many financial decisions are actually emotional decisions wearing a rational mask. People say they're selling because of fundamentals, but underneath is fear. They say they're buying because of analysis, but underneath is greed. The index investor short-circuits much of that self-deception. By committing to a simple, long-term approach, you're also committing to self-honesty. You stop pretending you can outguess millions of participants. You stop mistaking confidence for competence. You accept that your greatest strength is not foresight, but endurance. Endurance is rare. It's not glamorous. It doesn't get attention, but it changes lives. Over decades, endurance turns small, ordinary contributions into something extraordinary. It turns patience into purchasing power. It turns time into an ally instead of an enemy. This approach also reshapes how you experience downturns. Instead of seeing them as threats, you begin to see them as seasons, necessary, uncomfortable, but temporary. Just as winter doesn't cancel spring, recessions don't cancel progress. They test resolve and reward those who have it. I've noticed that people who stick with this path develop a certain calm authority. They don't argue about markets. They don't chase validation. They don't feel the need to prove anything. Their confidence is internal, built on consistency rather than comparison. And perhaps most important, they gain optionality, the ability to say no, the ability to walk away, the ability to choose work for meaning rather than survival. That is what money is ultimately for. Not excess, but choice. So if you find yourself overwhelmed by noise, confused by complexity, or paralyzed by the fear of getting it wrong, remember this: doing something simple well is far more powerful than doing something complex poorly. And doing it for a long time is where the transformation happens. Transformation rarely feels dramatic while it's happening. It feels repetitive. It feels ordinary. And that's exactly why most people abandon it too soon. They are waiting for a feeling, a surge of certainty, a moment of clarity. But the truth is, clarity often comes after commitment, not before it. There's a deep misconception that investing should feel exciting if it's working. In reality, the best investment plans feel almost dull. They don't demand your attention. They don't provoke constant emotion. They quietly do their job while you focus on living yours. That's not a flaw, that's the feature. I've known people who spent years educating themselves, reading every book, watching every interview, waiting until they felt ready. Readiness became a refuge from action. Meanwhile, the simple act of putting money to work consistently in a broad index would have taught them more than all the theory combined. Markets are better teachers than books if you stay long enough to learn. One of the great gifts of this approach is that it forgives human inconsistency. You will have months where you save less, years where progress feels slow, moments where doubt creeps in. The system doesn't collapse because of that. It absorbs imperfection and keeps moving forward. Few strategies offer that kind of grace. I've also noticed something subtle over time. People who invest this way, TEND, to make better decisions elsewhere in life. They become less impulsive, less reactive. They understand that most outcomes worth having require waiting. That understanding spills into careers, relationships, health. Patience becomes a way of being. Contrast that with the constant churn of speculation, the stress, the second guessing, the emotional highs and lows. That way of engaging with money trains the nervous system to live in tension. Over decades, that tension takes a toll, not just financially, but psychologically. The broad index investor opts out of that game. They're not trying to be the hero of every market cycle. They are content to be the beneficiary of long-term progress. That quiet acceptance is often mistaken for passivity, but it's actually a form of deep confidence. There's also an ethical dimension worth considering. When you invest broadly, you're not rooting for one company to crush another. You're rooting for productivity, innovation, and growth as a whole. You benefit when society becomes more efficient, more capable, more prosperous. That alignment feels right to many people, even if they've never put it into words. Over time, the numbers will fluctuate, but something more important stabilizes. Your relationship with uncertainty. You stop demanding guarantees. You stop fearing temporary setbacks. You understand that volatility is not the enemy. It's the cost of admission to a system that rewards patience. I've often thought that the best financial plans are the ones you can stick with when life gets hard, when health issues arise, when careers change, when emotions run high. Simplicity survives stress. Complexity breaks under it. And so quietly, without spectacle, the years do their work. Contributions accumulate, dividends reinvest, growth compounds. And one day you realize that the future you were worried about is no longer as effort. Agile as it once felt, that realization doesn't shout. It exhales. That exhale, it's the sound of pressure leaving your life. It's the moment you realize you are no longer running just to stay in place. And for many people, that moment arrives not because they finally earned more, but because they finally stopped sabotaging what they already had. I've seen how desperation distorts judgment. When money feels scarce, every decision feels urgent. Urgency invites mistakes. The broad index approach slowly dissolves that urgency. It replaces it with structure. And structure over time creates breathing room. There is a quiet confidence that comes from knowing your plan does not depend on your mood. You don't need to feel optimistic to keep going. You don't need to feel smart. You don't need to feel lucky. The system carries you forward even on days when you feel none of those things. One of the greatest advantages of this path is that it scales with your life. When you earn more, you invest more. When times are tight, you invest what you can. There's no pressure to make dramatic moves, no requirement to reinvent yourself every year, just a steady alignment between effort and ownership. People often ask, but what if the future is different? Of course it will be. It always is. The future is never a repeat of the past, but the underlying drivers, human ambition, competition, problem solving, remain remarkably consistent. The index doesn't bet on a specific future. It bets on adaptability itself. That distinction matters. It frees you from the burden of prediction. You don't need to know which industry will dominate next decade. You don't need to know which technology will win. You only need to know that progress will continue in some form. And history has been generous in supporting that belief. I've noticed that people who embrace this philosophy tend to age differently, not physically, but emotionally. They carry less financial anxiety into later years. They are less haunted by what ifs. They don't replay past decisions with regret because they chose a path that was reasonable, not reckless. Regret often comes not from failure, but from unnecessary complexity, from realizing you made things harder than they needed to be. Simplicity, even when imperfect, offers a kind of forgiveness. You can look back and say, I did the sensible thing with the information I had. This approach also restores dignity to the idea of being average. In a culture obsessed with being exceptional, average is treated like a failure. But in investing, average, captured consistently over time, is powerful. Average returns compounded over decades produce outcomes most people would envy. There's humility in accepting average and wisdom in understanding its strength. The index investor doesn't need to be right more often than others. They only need to avoid being wrong in catastrophic ways. And that alone puts them far ahead. As years accumulate, something else happens. Wealth becomes less about accumulation and more about alignment. Alignment between your values and your choices, between your time and your priorities. Money stops being the center of your life and becomes a support for it. That's when you know the system worked, not just on your balance sheet, but on your character. Character is shaped quietly, the same way wealth is, not in moments of excitement, but in long stretches of consistency. By the time you notice it, it's already there, solid, dependable, unshaken by the noise that once felt overwhelming. There's a deep peace that comes from knowing you chose a path you could live with. Not just when things went well, but when they didn't, especially when they didn't. Because anyone can feel wise in a bull market. Wisdom reveals itself in how you behave when uncertainty is thick and fear feels reasonable. I've often reflected that the real test of an investment philosophy is not how it performs on paper, but how it performs on the human being following it. Does it make you anxious? Does it consume your attention? Does it tempt you into constant second guessing, or does it quietly support a life well lived? The broad index held patiently has a remarkable way of shrinking money down to its proper size. Important, yes, but not dominant. Useful, but not obsessive. You stop organizing your emotions around market movements. You stop letting headlines dictate your sense of safety. That psychological freedom is worth more than an extra percentage point ever could be. I've seen people reach later stages of life with two very different expressions. Some carry relief that they don't have to worry as much anymore. Others carry regret that they made things unnecessarily complicated, unnecessarily stressful. The difference often traces back to a few simple choices made consistently over time. This path doesn't promise riches beyond imagination. What it promises is reliability, and reliability is underrated. It allows you to plan, to help others, to say yes to opportunities that matter and no to ones that don't. It allows generosity to be intentional rather than impulsive. There's also a quiet moral victory in refusing to play games you don't need to win, in accepting that you don't have to outsmart the world to live well within it. The index investor steps out of the competition for attention and steps into a partnership with progress. Over decades, that partnership becomes deeply personal. You remember the early doubts, the times you wondered if this was too slow, too simple, too naive. And then you realize those doubts were part of the cost, the price of admission to a calmer future. What remains at the end is not just a portfolio, but a posture toward life, a posture of patience, of realism, of quiet confidence. You learn that slow is not weak, that boring is not broken, that simple, when honored long enough, becomes profound. And perhaps that is the greatest lesson of all, that abundance does not need to shout to be real. Then let us close this conversation the same way a good life is built, calmly, honestly, and without hurry. If there is one thread running through everything we've explored together, it is this: wealth is not something you chase. It is something you allow to grow. And growth, real growth, requires space. Space from fear, space from noise, space from the exhausting need to be right all the time. Most people will spend their lives trying to outsmart the future. They will chase predictions, trade certainty for excitement, and confuse movement with progress. A smaller, quieter group will choose something different. They will choose a system over an opinion, a process over a prediction, patience over pride. Investing in a broad index is not a declaration of genius. It is a declaration of trust. Trust in human effort, trust in long-term progress, and trust in your own ability to stay the course when others cannot. It is an act of humility in a world that rewards arrogance, and an act of courage in a culture addicted to immediacy. You don't need perfect timing. You don't need extraordinary insight. You don't need to win every year. You only need to respect time and then give it room to work. In doing so, something subtle but powerful happens. Money stops being a source of constant anxiety and becomes a quiet ally. Your future feels less fragile. Your choices feel less desperate. And your life opens up, not because you chased more, but because you needed less. True abundance is not found in excess. It is found in sufficiency, in knowing you have enough, in trusting that steady, thoughtful decisions, repeated over time, can carry you farther than any dramatic gamble ever could. So walk patiently, invest simply. Let compounding do what it has always done best. Reward those who are willing to wait, and may your journey forward be marked not just by growth in wealth, but by growth in peace, clarity, and quiet confidence.